All right, good evening. Welcome everyone to the Hurley Investments Market View Commentary for Monday, May 20th. This is not a holiday week, but by Wednesday, big money will be out for Memorial Day. So don't forget, big money will be out of the market on Wednesday through Friday as we have Memorial Day weekend, which means no markets open on Monday. Markets are closed next Monday. Markets are closed next Monday. So have a wonderful 3-day weekend. Now, I had a kind of a unique comment made today. In fact, I had 3, but I'm going to start off with the first one. And the first one is, you lost money today. That was a question. My answer, duh. Today we were down $28,586 or 0.409%, while the S&P 500 was down negative 0.67. So as a whole, for the group that I call my education group, you guys, yes, I was down, but I'm still beating the S&P 500. Now, it's not for everyone all the way across the board. No, not everyone that I trade money for is beating the S&P 500 all the way across the board. And there might be one of you that I'm looking at that's here that she has been patient enough to stick with it and let things run their course. Some of the hardest things to do are literally sit on your hands and allow some stocks to move within the ranges that they move and to allow the process to work. The alternative, or you can go to an overpriced mutual fund. If you go back 3 or 4 weeks, I show you how Vanguard sticks you for basically 9% on any mutual fund that they have. Or you can sit in an index on your own and take that type of risk. Personally, I do not have the risk tolerance to sit in an index and let what may happen happen. That's not my personality. That is not my it's not in me to let things bad happen to me or my family as a whole. That's not what I do. Now, our process is simple, is to try to make up some of the downward movement on our stocks, which mean right now Ford, Under Armour, Disney, Visa, Facebook long calls, Bank of America are without protection as we took them off last week before the options expired. Apple, Baidu still have protection on the stock. Now, I'm going to show you a mistake with E-Trade. And it's not a super bad mistake, but most online brokers suck. They have their problems. I'm going to run a quick picture here of Apple. And let's see if I can't. Shrink it down a little bit. So here's what you see. You see the last change on the stock losing $5.91, and I got calls, Kevin, oh my God, we're losing on the long puts as well. And it's been this way all day long. Some long puts even right here were like, I'm getting killed. I'm absolutely getting killed. And I kind of giggled because if you look at the last change, or if you look at the options, when they're not catching up to the stock ownership, you might look at your account and go, son of a bitch, I'm getting killed. And I get it. It bothers me. It worries me. I have talked to E-Trade. I get what they're saying. There are times when the options don't catch up. But if you take a look at today's net gain, the stock was down $28,959, and we made up $27,440. Not bad. The simple answer, not bad. $1,519. $1,519 was not made up on 4,900 shares. So if I do the math, $1,519 divided by 4,900, I missed 31 cents for all intents and purposes today on the stock price. I missed it. I get it. It was missed. I'm not particularly worried about it because anytime I can make up $29,440 on a $28,000 drop, I know I am going to have some money to add some more shares of stock without once asking you guys to put more money into your account. I'm going to be sitting okay, and things are going to be good. My second call was, Kevin, we're getting killed on Baidu today. I said, no, volatility's up. Something doesn't add up there. A lot of shares. It was a $59,952 loss on Baidu. How'd we do on the long puts? How'd we do on the long puts there? That show a $10.76 loss on the stock, but only a $9.01 gain on the long puts. Someone please tell me, how did we do on our long puts today? We made up more than the stock lost on Baidu. You are 100% correct. We made up $56,810. With net with everything, $173 was lost on a stock position that lost $10.76, or roughly $55,952. Anytime I can do this, I know we're going to be adding more shares of stock into people's portfolios that are 100% paid for by the protection. Yes, it costs $7.73. I get it. It's now worth $42. Oh, and by the way, we rolled down from 170 to 160 and picked up $70.60 that I get to add on to this. We're making up over $50 to the downside. We're going to make up $50 to the downside on Baidu. So that even with 500 shares with some people, we're going to get to add another 100 shares. If I was to ask you guys, are you okay with being protected this way on your portfolios? No one commented to that, huh? Not one comment. If you're okay having your shares of stock protected this way. I'd hope at least someone out of the 14 of you, 15 of you would have said yes. Kind of an interesting position. Oh my gosh, what's happening with Ford? Ford is doing awful. We have a problem. Let's see if I can find Ford. I think Ford's right here. No, that's Bank of America. Gonna go through that one too. Where's Ford at? They're gonna lose 7,000 jobs, and you have not changed our protection. No, we have a $10 support level on Ford. Yes, it looked worse this morning. But someone, please tell me, how much did Ford lose today? On horrific news that they're going to lose 7,000 jobs, even though only, 2,200 of them are stateside jobs, everything else is overseas. How much was Ford down? 1 penny. $43 on 4,300 shares. I've got another 18 sitting over here. I lost $61 on Ford with 6,100 shares. Most of that, it wasn't even on the long calls. I'm okay with where we're at on Ford. I can sit through a day today. The other one, which is disappointing, and understand brokerage houses have their mistakes. Bank of America long puts are losing tons of money. And I know it kind of seemed that way. Excuse me, not long puts, long calls. But our stock was flat today. $0.02, which actually comes out to 3 because we have 70 contracts, 210. So we lost 3 pennies a contract today. We lost 2.5 pennies right here. Covered call made a little bit. I am okay working through and sitting through some of these hard times on market movements like this. Kevin, there's some stock you're not protected on. And I'm primarily going to jump out there with Visa, which was down today 62 cents, up 42 cents after hours. And Disney took a dollar hit, $1.13, yet still stayed above the 133.50 range. So I'm letting the positions move. I'm letting the positions move. There are times when it is hard as hell to sit on your hands and allow stocks to move like stocks move. Why? Because if you are always protected at a cost of an at the money long put, you have 28% of your growth you are giving away by buying protection. You really won't make any money. So as I look at everything overall, S&P is still up like 13%, 680, 680 divided by 620, and I'm only up 10.96. So I got the S&P beat me by 2.31% right now. With how well we've done on Baidu, again, I'm going to need one stock to really take off this year: Baidu, Visa, Ford, Facebook, Disney. Although Disney has had a nice run, I'd like to see it up to 150. Anywhere in that range, things are going to look amazingly well for us, and I'm okay where things are at. I love the way that you get to do the best you can to literally you're doing the best you can. How am I going to say this? I love the way that you're proactively able to do the best you can and not have to sit and wait for things to come back. Sitting and waiting for things to come back just pisses me off. Pisses me off to no end. That is not the way I trade. I'm not interested in group trading, trading the bad with the good. I want to find the Warren Buffett companies that are way undervalued with low PEs that have significant high side potential. That's what I do. I am doing Warren Buffett type trading for individuals that aren't in the 5 billion or more range. And I love it. If you were to ask me today where we're going to end this week, I've got to say lower. I've got to say lower because that's the trend. I'd like to think we might push it up, but I doubt it. I think we're going to be lower. I think we're going to test the 200-day. Technically looking at the stock market, we're bearish on our RSI. We're bearish on our 520. We're down testing the 200. We're bearish on the MACD. And we are basically oversold. Well, not quite. we're bearish on our Williams percent R, medium stochastics. If we look on the S&P 500, it matches it, we're bearish. Same exact thing. Definite crossovers on the RSI, hit the median line at 50, bounce back down. We pass below the 50-day, we'll probably go test the 200. RSI, MACD is also down, and our Williams percent R is also heading down. NASDAQ, same exact thing. We are bearish. So the question is going to come, Kevin, why don't you have protection on everything knowing 80% of the market follows the S&P 500? And that I don't have an answer for. I don't have an answer for because we get horrific news on Ford and it's down a penny. We have a little bit of a sell-off on Disney, but it's holding where it should be at. Bank of America is flat today. Some of what we trade has been down far enough that it's starting to buck the market trend. So as worried as I get, I don't feel I need to start to change the way that I have our positions for trading. I can live with being in these type of positions. I don't like it, but I can live with it. If you ask me where I'm going to end May, it's kind of funny because obviously May is down from 29.50 to 28.40, down about 3.5%. I'm starting to go negative. I'm saying it's going to be down 1%. I could see it being a 5% down month in May, but I'm going to stick with only being down 1%. Earnings, we're starting our first real big batch of retail earnings. Nordstrom today, JCPenney, Home Depot, Kohl's, TJ Maxx, Urban Outfitters. The Home Builder, Toll Brothers, was after the market closed. Wednesday, we have Target, Lowe's, LB Brands, VFC Corp. Thursday, Best Buy, BJ, Intuit, Ross Stores, and Hewlett Packard. Friday, Buckle and Foot Locker. We're getting through our first big week of retail. Well, that'll be followed up next week, and then it kind of tapers off. Economic reports, existing home sales, FOMC minutes on Wednesday, but we had Bullard. I'm pretty sure it was Bullard. Was it Bullard? Who came out today? Who came out and spoke? Basically, it was businesses Fed Chair Powell, business debt is rising but does not pose a threat to the system. So pretty interesting. I will add this one on in here. I did not do that earlier, but I will do it, and I'll have it in our final copy. But Chairperson Powell, hey, we're okay. There's a lot internationally that's going on. There's a lot with China this week, especially tonight. Japanese merchandise trade, import-export, machine orders. There's a bunch tomorrow. Also on Wednesday, there's a bunch of England, Great Britain reports. Nothing, though, that should move our markets. It's just a bunch of reports that are coming through. I'm going to get your question in just a minute. Where else are we at? Interesting article on 3 reasons to park your money with Disney. I agree 100% with all of it. Great article, and I think you see Disney at 200 in a couple years, if that. What else do we have here? Facebook sets up Swiss fintech for blockchain payments. Interesting report, not a lot of data. but it would be interesting to see if there's a Facebook Bitcoin. I don't necessarily agree with this, but I see where they're going with it. Apple stock could jump as much as 530% despite Trump's trade war on China. It's a stretch, but mathematically, it's valid. It is valid. It's just not highly probable. Unilateral escalation of trade disputes badly hurts consultations. Just a little bit to see what they're saying about us. This is the one where we're being bullied by the United States that I mentioned last week. And we're ready to pull the trigger on these three stocks. We're almost in the oversold territory from Jim Cramer. Again, basically technology, Alphabet, Apple. What was the other one? Dang it, I don't know. Guess there's a bunch in here. Facebook, Amazon, Netflix, and Alphabet. Those are the big four. Where else are we at? Before we go on, Blankenfine, Trump's tariffs aren't a bad idea. Interesting thought process on it. It's looking at both sides of the fence. Definitely go through it if you don't understand the tariff process. Pretty good to understand what we're going to battle for here. And again, I like Blankenfeld. I agree with what they're saying here. Quick question was asked. Let me go to that question and get that out here for us. Let me put it in here. Questions. Does a short squeeze, traders covering their shorts, account for the small dip in some stocks? Okay, so that contradicts each other. A short squeeze is when there are a larger number of shorts, which is usually greater than 2%. Greater than 2% of the float. And to cover the squeeze, people start bidding the stock price up as they are covering their short positions to lock in a profit. So if you have a short squeeze going on, that's usually a huge buy into a stock as people are covering their short positions. That does not account for a small dip. That would account for a big run up on pretty minimal news. I would expect you're going to see a short squeeze relatively quickly on something like Baidu. Baidu down from 288 closing price to 284, trading in 118, right? 117 and change is where it closed. You're going to have a ridiculous short squeeze on Baidu that closed at 177.55, probably going to go down to 110, and then you could have an opportunity of a lifetime on Baidu and how am I trying to say this? A ridiculous covering of short positions on Baidu. Let's take a quick peek and let's see what the short is right now. I would tell you it's got to be at least above 2%. Baidu, ugly. Could go down to 100. All right. Where's our short? Short ratio right now, short float 2.52%. Ridiculously high. Shares of short floating are shares of float 227. So there's 7-8 million naked shorts out there right now that have made a killing. And again, it's time to hurry up and cash those in. Target price at 209. First time that they've missed their earnings since 2005. Big opportunity. You're going to see a big bounce on this one when it does bounce as people cover those shorts. Lock in those profits. So, Ida, great question. Loved it. Good question. Are there any other questions? If not, guys, I want to appreciate you being here tonight. Hopefully, you're not too stressed or worried about things. I think we're going to make it okay. I do think we're in pretty good shape. No reason to panic just yet. No reason to panic just yet. I think we're going to be okay. Guys, have a good evening. I appreciate you being here today. Hopefully, we will get through this rough week. Tomorrow, we are going to have Keeve be in charge of the trade findings, as I've got a boy that has a birthday. If he's at soccer practice, though, maybe I will go ahead and take care of the trade findings and adjustments tomorrow. Guys, appreciate your time. Have a wonderful evening. Look forward to seeing you tomorrow night. Trade findings and adjustments at 6 o'clock. Look for a GoToWebinar reminder that usually comes an hour before, 6 p.m. Mountain Standard Time. Last one I'll have for you will be Thursday, although Thursday, not sure if I'm going to put a trade on, so I probably will cancel the Thursday trade findings and adjustments, but we'll see where we end up tomorrow. Have a wonderful evening. Appreciate you guys being here, and I'll look forward to seeing you tomorrow. Bye-bye.